Welcome back to Market on Close. I'm Nicole Petalides. Traders getting ready for their closing bell orders. It's options corner time. Kevin Green is here with us, and he's watching many things, among them options flows in the S&P 500. I did, by the way, see 5,400 at one point. Tell me a little bit about the options flows.
Yeah, so Nicole, obviously we had a pretty decent day, especially when we started off, but it was just maybe a little bit unsustainable to the upside here, and we have seen a little bit of a pullback. Now, when you're looking at the market breadth, we are still seeing around 68, 69% of the stocks in the S&P 500 in the green so far, but you are starting to see a lot more put flows coming into the S&P 500 options, especially when you're looking at the 5350 puts, really expiring this Friday as well as Monday. Those started to creep into the market here a little bit, and the price action starting to also follow that. So kind of going into the close, what are we really looking for? We have this downtrend pattern that took place. We actually had this lopsided head and shoulders pattern as well, right when we kind of crossed that 5,400 level, and we did break that neckline, and that break of the neckline is actually bearish so far, but we are trying to hold at least this 53-57-ish area here. So if we go back and we're actually able to defend that, move higher here, we do have some pen risk sitting at around 5,400, as you kind of talked about in the opening here. And if we try to push up a little bit higher, looking at maybe 5,410, unless we get a massive rally to close here. But if we break down even further, you're looking at around 5,350. That's a key level to defend. And if we are unable to defend that, we could actually create a little bit more of a void or some pressuring to the downside here, Nicole. And that's when you're starting to talk about 5325 to even 5,300 going into the close, which sounds like a long way away. But unfortunately, what you're seeing is the lack of buying activity kind of taking place throughout the day. You're seeing a lot of profit taking happening right now, and unfortunately that's just putting some downward pressure on the market. If we're looking at the longer time frame, though, I do want to kind of call this out. The candlestick also does not look great today. Yes, we are up 1.3%, but we have something that's called a shooting star pattern, meaning that we open high, we try to push higher, but we had some sellers kind of pushing us down, and now we're actually lower than the opening print for today. And unfortunately, that also aligns with the 20-period moving average. That's actually a bearish pattern or bearish candlestick. Now, once again, we still have green on the screen, but this is a reversal pattern, and we also have a gap to the downside here, keeping this wedge pattern intact here. So hopefully we're able to recover a little bit with the remaining 24 minutes left to go in the close. But this is really not the action that you would like to see if you're a bull, really trying to break out to the upside, really trying to overcome some of these key areas of resistance like the 20-period moving average, this downward sloping resistance line or support that flipped into resistance line for the last 3 months or so. And unfortunately, once again, it seems like the selling pressure is really overcoming any type of buying enthusiasm right now.
Right, and and sometimes the open is the highest point of the day. That was not the case when you said, if we drop below where the open was, the highest point was 54.69, right, today?
Yeah, 54.69. And this morning, we were actually calling out the 54.80 level as your potential area of resistance. So rightfully so, we were about 10 points away from that, where you did see some pressure to the downside. And I think it's also just the messaging, as you were talking about pretty much throughout the whole show, and what we've talked about pretty much all day today, is the news flow. And we had some very positive rumors coming out, but as the day went on, we started to get more clarity as to what the Trump administration is looking forward to when it comes to maybe potentially reducing the China tariffs and things of that nature. And that news flow really didn't really help us out. And so we're kind of getting more clarity, and it looks very heavy at these particular levels. But once again, a really strong showing. I mean, to have an up day of around 1.3%, you still want to take what you can get, but the lack of follow through leads you to maybe a little bit of cautiousness that maybe some bears could actually step in and try to knock this down, and at least try to test that gap that was actually developed because of today's opening print.
Yeah, a softer Trump can help the markets, but it may not help folks that were very ready to sell into the rally. And those folks, who were saying, I'm going to sell the next rally, whatever it is, I'm selling in the rally, they're out. And so, he could say whatever, the sky is bluer than ever, and they're still going to be out because people are nervous. And I think that's has validation to it. When they see stocks down 5 or 10 or 20%, they're nervous. How about silver? I mean, we've seen the safe haven of gold for sure, which came back today about $100, but silver also has been a hot spot.
Yeah, if we actually can take a look at that gold chart first, just really quick, just kind of shows, once again, a technical formation that does seem like, I wouldn't say a blow off top and we're never going to reach all-time highs again, but it did, show that maybe a lot of that buying enthusiasm that we've seen over the last couple of days may have gotten a little bit exhausted here. Yesterday, we had this, once again, shooting star type of candle, broke above that 3,500 level, closed below the opening print. And today, we started seeing maybe a continuation pattern of some bearish trends. And I'm kind of looking at that 3189 level as your first area of support, the 20-period moving average. The reason why I also say that you got to keep your eye out on gold, we do actually have a bearish divergence pattern taking place where the RSI is making lower highs, and it did cross the overbought bought line, which kind of confirms the bearish signal. MACD is also kind of hinging right now. So be on the lookout for that. But this could also lead to this rotation into silver. We brought it up this morning. Silver was down about 0.3%. When you're looking at the futures contract, it's up about 2.1% right now. You are seeing a rotation, some enthusiasm taking place. MACD still in that bullish formation, and the silver to gold ratio actually made meaningful ground here today, actually breaking above a really key area. And so a lot of commodity traders are going to be focusing on this. If you are bullish that the economic headwinds might be priced into the market, silver most likely is probably going to be the direct beneficiary of that, rather than gold, and just a relative outperformer compared to gold, which gold has had a phenomenal run. But I think the silver bulls definitely want to get their time to shine here, and this might be the setup in order to do so, Nicole. And the first area of resistance, $35.08 or so. That's going to be a hard area to break through. But if you are able to break through that, let's say $1.50 to the upside, that's where you can start seeing some really massive buying opportunities taking place here and squeezing a lot of the shorts that have been compressing price over the last 6 months.
Yeah, and look, the RSI goes into the overbought, but I think any of us didn't need the RSI to tell us that the whole world was crowding into gold. If you're paying attention, you knew gold was overcrowded trade. So people are turning to silver. But once it becomes risk on, I don't know how much they're going to go into commodities, period, because then they might be back hot on something else. I don't know. Well, thank you for all of that. And it was a good look on silver, which was up, 2% today. And you noted the 35 sort of resistance level. So we'll watch for that. And we'll talk more about commodities in a moment with Dan Deming. So we'll all enjoy that, Kevin. Kevin Green, thank you.